Welcome to Taking Stock. I'm Amanda Lang. Coming up on the show, will companies stay confident in the months ahead when it comes to spending and hiring? And hockey playoff season is underway. We're looking at the economics of teams and what makes them valuable. Plus, Revenue Canada wants to file taxes for some Canadians. Is that a good idea? That's all ahead. First, for the week that was in business, it's time for the briefs. The Canadian job market blew past expectations in April, adding more than 40,000 jobs, a sign that tight labor markets continue despite work by the central bank to cool the economy. This week, the Bank of Canada warned that if inflation persists above 2%, they will raise rates again. In a piece of good news, if symbolic, the World Health Organization has declared the global health emergency over. But while it is calling an end to the most urgent phase of the global pandemic, the WHO notes that the pandemic's not over, with recent spikes in COVID in Southeast Asia and the Middle East. The U.S. Central Bank raised interest rates again this week. The 0.25% move is its 10th consecutive increase. But in a sign hikes could be ending, the Federal Reserve said it will monitor jobs and growth to determine if further action is needed to fight inflation. U.S. bank First Republic became the third bank failure in recent weeks. It's the second biggest bank failure in U.S. history after Washington Mutual in 2008. The orderly failure will see First Republic's assets taken over by JP Morgan Chase so that all 84 First Republic branches will reopen. As JP Morgan branded branches, all deposits will be available to customers. Housing markets across Canada continue to show signs of tightness, with prices increasing slightly in April. That increase came amid tight supply, as the number of listings remains well below historical averages. In Calgary, home prices hit a new record high as inventories dropped 34% from last year. The same was true in Vancouver and Toronto. Good news for sellers, but disastrous for those concerned about affordability. The union representing more than 155,000 government employees struck a tentative deal with the feds this week. The agreement includes wage increases totaling 12.6% over 3 years, plus a one-time lump sum payment of $2,500 each. Not in the contract is the fixed number of days employees can work from home, but the union and government employers agreed to work on a case-by-case basis to allow for flexibility. And those are your business briefs. Well, certainly based on the jobs market, there does not seem to be a slowdown so far. So what's the business community seeing? David Boone is the CEO of Staples Canada. David, great to have you with us.
Great. Thanks. Great to be with you, Amanda.
So it does feel as though even as we continue to talk about the potential for a recession, there's certainly still signs of strength. What are you seeing in your business? Because you've got kind of a front row seat to what other businesses are feeling.
Sure. So in terms of the job market, I would say I'd say for us, it's better than it was sort of 6-8 months ago. There's certainly demand for employees out there and for companies hiring. In fact, we're in the process of hiring 800 people at Staples right now to support our partnership with Bell. And what we're seeing out there is we have to compete on the work environment and the type of work that employees can do in addition to wages. So lots of demand for frontline employees. Yeah,
we're interested in that 800 number that you yourself are adding. It is a tight labor market. Are you able to do it? I mean, as you say, you maybe have to pay more than you want, offer some new terms, but are you able to get the bodies you need?
We're pretty excited about the demand of employees wanting to work with Staples. And what we're seeing is the type of work they get to do in our organization, which is very different than traditional retail. We're very much B2B and B2C, is very appealing to people out there. So they're coming to us for more than simply wages, but it's a work environment and it's a career opportunity.
Meanwhile, we have had lots of talk about the potential for a recession. We still may get a slowdown at some point. I think the central bank wants one. How do you plan for that, even while we see this tight labor market conditions? Things feel pretty good on that front, and yet are you planning for a recession?
Well, our expectation is that there won't be a recession, but a slowdown. And what is unique about our business is because, again, we serve both businesses and consumers, demand tends to shift. So, for example, you would know there's a bit of a slowdown in the consumer electronics market, but corporations are spending money on their office environment in order to support hybrid work. And so we're seeing a lot of shift that way. And we're also seeing shift in demand to things like travel. So passport photos, business travel types of cases and accessories. And so in our case, it's a lot about shifting on the customer base versus a general reduction in demand.
So we've only got about 30 seconds here, but would you say today you are more confident than you would have been 6 months ago?
Yes, our organization across the board is quite confident in how 2023 is going to play out.
And does that then spell into other initiatives for you and capital investment in spending? You are hiring. Might you do other expansionary things if you're feeling good?
Yeah, so we're growing. Our revenue and our earnings are growing, and we're investing in the business, probably triple what we invested 5 years ago. And so we're excited about the future of Staples.
David, so good to have you. Appreciate your time.
Great. Thanks, Amanda.
David Boone is CEO of Staples Canada. Coming up, it's playoff season for hockey fans. It might surprise you to learn, though, that winning isn't key to making a team valuable. Stay with us.